Hi everyone, it's Grayson here. I hope you are doing alright mentally and physically. So for those that don't know me, I'm a stock investor and I have experience working with a asset management firm. So with celebration of my first video that hit the 10k views, I decided to review my own personal stock selection process. And thank you very much for everyone for the support to help me to achieve my first 10k view of my video. So without further ado, let's get into the video of how I personally select stocks. Last year, my personal investments accounts have a 28% annualized returns. So I would like to think my investment strategies is working, and that's why I decide to share to you guys, which I conclude it into something called 4R system. A 4R stock selection process is including the first R, the right business model, and the second one, the right management, and the third one is right timing, and the fourth one is the right price. So today I'm gonna share to you the 4R of my personal stock selection process. So let's get to it. So like I mentioned just now, a very important aspect for me to do a fundamental analysis to a company is these 4R models. The first R, the right business models, second R, the right management, third R, the right timing, and the fourth R, the right price. So if this business or this stock doesn't match this 4R that I mentioned just now, I would invest in that stocks. So the first R, business, the right business model. So what is a right business model? A right business model means it's a business model that have a very strong economy mode. Economy mode is something that protecting the business, which make it very hard for the competitor to skip in the industry and become their rivals or competitor. For example, like Genting Malaysia, they are the only casino that have a legal license for gambling. So it is very less likely for the Malaysian government to give another company a gambling legal license for them to open another casino. So the economy mode for the Genting casino business is they are the only legalized business in Malaysia. So they have a very strong economy mode that protecting their business. Economy mode is like a castle that are protected by a rivers. So if the castle are protected by the river, it is very hard for the enemy or any rivals to close the castle and very hard for them to get inside the castle. Same with the business model. If the company or the industries are protected by a strong economy mode, it is very hard for the competitor or rivals to get in the industry and becomes their competitor. So another great example of the right business model, which means have a right economy mode, are Nestle Malaysia. Nestle Malaysia have existed in Malaysia for decades, which make them have a very recognized products that already have involved into the Malaysian lifestyle. For example, like Milo, Maggi, instant noodle. This is something that Malaysians are very hard to live without. So that is their business model that are protected by the right economy mode. So again, the right business model means it's a business model that are protected by a very strong economy mode. I know this is somehow confusing for the first timer that listen to this economy mode thing, but if you think about it for second time, third time, fourth time, you will start to get sense of it and you will start to look into the business that have a very strong economy advantage that are protected by many aspects. And the second R is right management. A right management means it is a clean, positive, and ethical management. Because if a company don't have a ethical, clean, and positive management, even though they have a very good, even the best product or services in the market, people are less likely to get the product or services. Because it is very important for a management to have a good background. For example, like they don't have any records of making fault or bad financial statements. They didn't change the financial statements themselves to make the quarter or annual reports look better. They are very genuine and transparent to the shareholder and the clients and the market. So all these kinds are the factors that we have to look into the management when we select the stocks of the company. Because if we look at the product or services itself, it's not enough. We have to look at the people that are handling the whole operations and the people that found the company and the people who are managing the company in a daily basis. so we can project the future of the company or the product or services they are distributing or providing right now. So again, the second R is very important for us to look at the right management of the company before we invest. And the third R is the right time. Right time doesn't mean I ask you to speculate or even do the timing to invest in the market. I'm just saying that do not invest in the company when it is obviously overvalued. I don't want to mention any name, but recently there are few gloves company in Malaysia that are trading in historical high right now, and it is definitely not a good time to invest in those companies, because if you invest in a higher price, it is less likely for you to go another higher price if you are betting on a mere positive projection of yourself. You have to look at the strong fundamentals before you invest in any company as usual. But if you are invest in the highest timing, for example, if it drops the next day, you are getting the hurt the most. So again, it's very important for us to look at the timing if we want to invest in any company. We do not invest in their historically high, and we do not invest when they are trending and everybody is speaking, and especially the newspaper or Instagram or Facebook are sharing all the news about the company, and that is definitely not the right time to invest in a company. We have to invest when nobody is talking about it, absolutely, so we can invest in a very, very low price, and that's the first rules of the value investing by Warren Buffett. Last but not least, we have the fourth R. The fourth R is the right price. Right price means it is when we invest in a company, we have to look at the stock price, like I mentioned just now, in the right timing. We have to look at the stock price. So how do we judge a price? Is it overvalued or undervalued, or can we invest in this stock price right now? That's why we have to look at many ratios. For example, like PE ratios, price per book ratios. We also can look at their financial statements. Are they growing in the past 5 to 10 or even 15 years? We can look at their EPS, earning per share, historically EPS, or even growth, or even payout dividends. There are many ratios and many statements or many data we can look when we want to determine the stock price. Is it overvalued or undervalued? Personally, myself, I look at PE ratios a lot, and I look at growth a lot, EPS, dividend payout ratio, and their expansion as well. These are some of the expand or even some of the aspects that I look into very much when I want to invest in a company. So again, the right price is very important, because we absolutely don't want to invest when the stock is trading at historically high, because we will be the one that get hurt the most if we are investing when everybody is talking about it. Because when everybody is talking about it, means everybody is buying it, and the stock price is definitely in the highest price in the historical. So again, right price is very important, as well as right timing, as well as right management, and of course the most important at all is the right business model. So that's it for the 4R system. Again, the first R is right business model, and the second R is right management, and the third R is right timing, and the fourth R is right price. So of course, my own personal stock selection process is much bigger, and the vision is much wider. If I have to explain it to you guys, I have to take probably 2 to 3 weeks. But this is just a quick summary of how I personally select stocks. And of course, it will include a lot of analysis and a lot of fundamentals, also technical analysis when I want to invest in the stocks. But this is just a basic, broad, wide overview summary for my 4R system. So I hope you get value in this video, and if you have any question or if you want to know more about my personal stock selection process, do hit me in the comment section below, or find me on my email, which I have a link down below, or even you can contact me on my Instagram. So I hope you get value in this video, and stay safe out there and stay invested. Take care. See you in the next video.